Hello, and welcome to another daily review with Adrian H. Today we'll be reviewing NASDAQ December 10th, open high, low close, daily candle as part of the market maker sell model continuation, as we discussed in the previous video. Let's begin. Starting on the 1 hour time frame, just to recap, we can see that price has taken the external liquidity. We reached our 4 standard deviations and we've been looking for a manipulation swing into a reversal. You can see we've got our manipulation swing here. And what do we do with manipulation swings? We look for the gap that it creates to get inversed, which will then lead into continuation. We can also note, now that we have this leg here, the bottom part of this has been swept. We can now do a higher time frame deviation swing to get more of a higher time frame bias and targets. Let's switch to the 4 hour. And we're going to measure the high to the low that made it. This is going to give us our additional zones to now watch. We have our 1.5, 2.5, 3.5, and 4. As we've done our external liquidity, we're looking for price to come back at least back into internal liquidity, which is this gap here. It's a bit larger on the 4 hour. This was our 1 hour measurement. And we want price to come back into discount of this whole market maker model range. It's a good area down here. Let's dive into the 5 minute. We always begin our day with marking out our previous day high and previous day low. Previous day low is covered up a little bit here. That's it there. And our previous day high. As we're shifting bearish after we've broken down here, we want to do our OTE fib level from here, PDH to PDL, and this then gives us this zone here. For continuation, we would like price to come back into our premium price and continue down. This becomes the foundation at the beginning of our analysis. Let's dive into Asia. This is from the New York PM session, the most recent low that was created with a change in state of delivery here and some levels to watch during the day. We have an SMT with ES at the low. So we've got our New York AM low was here. PM's come back and ES has swept that low. That's what gives us the SMT. NASDAQ has made a higher low while ES swept this low. One can then expect price to continue higher and this low not to be swept as ES's was swept. Okay, Asia, quarter one. Asia's built up liquidity at these points. Come back down. Sort of some consolidation really here for quarter one. Swept these intermediate lows. It's created a little range and taken it out into quarter two. Have this high and we break structure here. Change in state of delivery. We can then measure this and get our 1 to 1.5 levels. If expecting continuation up, it's plausible price will come back to this area to continue up, as we want price to continue up so we can later on look for a short with price in premium. Quarter 3 into quarter 4 is just consolidation. You can see we have our gap here from this manipulation swing. If we did want to short this, we could look for a short from that retest, and we would be targeting these areas. And this is our optimal trade entry drawn from this manipulation swing. You can see price is unable to get above that 50% level as well. Into London, quarter 1, we've got that move down. Taken out liquidity, so this is our Asia low. So liquidity has been taken, and then we've gone into some more consolidation for quarter 2. Quarter 3, we've got our London manipulation here. Change in state of delivery once this candle closed above that level. Then drawn out our standard deviations. So swept the intermediate term lows, had our manipulation swing, drawn out our manipulations, drawn out our standard deviations. We've then got our levels. Take this off. So we got 1.5 we want to look for, 2.5, 3.5, and 4. Put our probabilities on. And we also want to look for liquidity at these levels. So we have our Asia high here at the 1.5, and 1.5 being 91% probability. And this is a really good target to aim for, in my opinion. So prices come up, we've got a change in state of delivery. We've come back. This box here is our 312 candle. We're using that as some confluence as well. And we can draw our optimal trade entry from the low to the high for extra confluence. Change that to OTE. Pull that across so we can see it. And we've also got, if we make this a little bit larger, there's a bit going on here. We've got our H1 level, which was our 3 o'clock open. The reason I've drawn this on is going into bullish structure here, we want manipulation below the open, which becomes the wick. So we've got our open low, high close, and we want to catch them, and we want to catch the expansion leg, of this 1 hour candle. So price is open, gone low, anticipating this is the wick as it swept everything here. And we've got this gap here. So we've got a gap in the manipulation swing. We want to look for that to get inverted. We can enter either here, or we can try and get something lower towards the OTE. However, normally we want that inverse gap to hold. So we would enter long here, stop loss below the low, which is the current low of the 1 hour wick. Price then consolidates at this level a little bit more. Some painful price action there when in the position. And then quarter 4, we've gone into expansion. So Q3 manipulation, quarter 4 expansion. So this whole 3 o'clock candles just stayed in this zone, then opened into the, so 4 o'clock. We've then gone open, low. And now we're getting our expansion into 5. 5 o'clock's opened with a small low and continued up. We've hit our 1 standard deviation, 100% probability, and this went straight to the 1.5 here. That was take profit for me at that point. Exactly 1.5 to the tick. Retrace back to Asia high and then continued up. Just knocking through that 2.5 into another retracement. So remember, 1 to 1.5, we have our reaccumulation. So we're expecting a pullback here. 2 to 2.5, reaccumulation phase 2. We've got that here. And then we just expect expansion to continue to target from there if still in the trade, which we did have slight retracement here and then straight up. This line here, this is our 1 hour balanced price range, which is the 1 hour gap that we circled on the 1 hour chart. Okay, continuing on. Get rid of some of this. So I've had a Q4 expansion. We've gone into Q1 of New York AM, which has continues to target the 4 standard deviation plus this 1 hour manipulation gap. Price is then consolidated. We've now got our new true market session open level, and we've manipulated underneath. We can draw a fib from the low to the high, and we've come back to that 0.5 area. We've then got our change in state of delivery coming into Q3. So we can draw our standard deviations from this swing. And we have targets 1.5, 2.5, 3.5, and 4. If wanting to catch this continuation leg. We can also do our OTE from this low. It's getting a bit messy here now. This magnet here. Oops. So from this low to this high, we're in that 1 to 1.5 reaccumulation phase, and we come back to our OTE. We look for arrays within that area if looking for longs. We don't have a slight inverse gap here. It's only small though, it doesn't quite align. So we take this bullish gap that we have here, and we could look to enter at the 50% zone of this bullish gap, which is also our 0.62 retracement. Clean some of this up so we can see it a bit better. So we've done our fib levels from the low to the high, got our optimal trade entry at 0.62. We've got our bullish gap here, and 50% of that plus the 62 is a good entry point. Stop loss below the low. Looking for continuation into the 2.5. For your next target, 3.5 and then 4. Price then continuing up. And this is the main area that I've been looking for as the main idea for the day, was to short this during the quarter three manipulation from our daily range optimal trade entry down to previous day low. Main trade idea for the day. And looking at our stats here, we have a 52% chance of the manipulation up occurring in quarter three. Quarter three, again, being from 9 o'clock to 10:30. Prices come straight up into this box, which is our daily optimal trade entry. We have a POC. POC is a point of control, and that's determined from this swing to this swing. And we're using our fixed range volume profile, dragging from the high to the low of the swing. We can then see where all the volume is. The POC is this line here, which we can see where the volume extends here as well, all the way across, right to the middle of this zone. We can also note that this order block created this change in state of delivery. So this manipulation push up from quarter three AM session yesterday hasn't been mitigated. And what does that mean? Price hasn't come back to release the orders used here. So price was manipulated up with buy orders, and those buy orders need to be released and turned into sell orders. That is exactly what price is doing here as it comes back. So we can grab 50% of this range plus this point of control and look for sells in this order and get on board while institutions are releasing orders from this manipulation swing. So we've manipulated up. If staying on the 5 minute, we're looking for a bullish gap to get inverted. And we have that here. Other options are we can look for that macro for 10 o'clock. So from 9:50 to 10:10, we're looking for liquidity raid or a high raid to then enter in on. So we get our sweep, down close candle here, and we can enter here with our stop above here, entry here. Alternatively, we can wait for this to get inversed, candle close below, enter here, stop loss above here. And we're targeting PDL. When in market maker sell model, we're targeting previous day lows. We also had the London low, extra confluence, and these two lows here. All of the lows here. So we can now measure out this swing. We've got our 1.5, 2.5. It's quite a large swing. 1.5 we're looking at for New York has a 93% probability. The quarter three manipulation we know was 52%, so it's high probability with the reversal occurring in this quarter. Change in state of delivery. This has gone straight back into this zone. Come back up for quarter one. So some quarter one consolidation or redistribution. Price comes back, creates some highs. We get a sweep, bearish order block. And we're also at our true day open. And we come back Asia high rejection. That's why it's always good to have these session levels on, especially Asia. Asia high and low, price likes to bounce off either side. We can then measure this one if we're just looking to get into a trade from this. Pop on our standard deviations from here. We have 1.5, 2.5, 3.5, and 4. So if we're looking to short the PM session, these are our levels we're looking at as well, and combined with this main manipulation swing here. If we get rid of this, we can also see here as we go into quarter two, price is coming back, and it's coming back to mitigate orders here that we used to sweep these highs. Comes back, retests, releases trapped longs, and continues down. Same thing that we're looking at from the higher swing. Comes back up to release the orders from here, continues down. Manipulates up, comes back up to release some manipulated orders, continues down. Nice hit of the 4 standard deviation there as well. Into quarter three, got the change in state of delivery. We look for our gap that was in that manipulation swing. And we can also do our OTE from here, which we can see price didn't dip back into this time. And preferably we would want price to do this. Price then continues up, come back up to the 1 and 1.5 standard deviation. And quarter four, as always in New York, just consolidates and doesn't do much at all. Well, we'll leave it there, I reckon. The other diagram we have here, so this is sort of what's played out over these 2 days. So we've got our equal highs, manipulation, price comes down into redistribution. So we have a consolidation, our manipulation, which sweeps this level. We have new liquidity down here, and we get our expansion. And this move that's sweeping those is also mitigating this order block. Price comes back down, consolidation, push up, taking those highs, we come down, more consolidation, building more liquidity, building lots of lows for later. And then we have our New York manipulation, which is also coming back to mitigate orders from this manipulation swing. Releases the longs used to manipulate, gives us the powerful move down, and takes out all our lows. All good. Thanks for tuning in and listening. Any questions, drop them in the chat. Thanks, guys. Bye.